terms of the 90 odd billion in technology M&A year to date, we're about ranked number 5th of the 10 S&P 500 sectors. WhatsApp ranks as the top acquisition of the year at $19 billion. Again, that represents over 20% of the deal value of technology activity year to date. And we talk about cash on the balance sheet. We talk about American corporations really engulfed with cash. I think on a global basis, if you look at all the non-financial companies in all sectors, there's something on the order of $8 trillion in cash on the balance sheets. In terms of U.S. companies, looking at non-financial companies, the numbers are about $2 trillion. Those about 2/3 are really concentrated in 3 sectors: healthcare, industrials, and above all, technology.
In terms of client interest and external interest, I don't think there's any question that from where I sit, mobile and social has to be at the top of the list. And it ranges from a variety of different reasons, right? So you could look at Facebook basically about to overtake IBM as the 4th largest US-based technology company. I mean, Facebook came public a little more than 2 years ago. Or you think about Twitter, which seemingly is one of the most talked about companies right now. So there's just a lot of kind of consumer-driven external interest.
But what's been interesting for me over the last 12 months, about 3/4 of our inquiries are cross-border. And people are looking, whether it's valuation-driven or the uniqueness of the technology, a lot of deals on a lot of continents. People are asking, how do I get into this market? How do I do a deal in this market? And we'll get into this, I think, over the course of the panel, but far more, just like technology, borders are coming down and people are not as insular as they once were, I don't think.
At the end of the day, most technology companies are missing a balance sheet item, human capital, the people. And so taking the time to really understand the strategic fit, the business fit, the comfort of the team going to work for the acquirer, and also just the necessary disciplines we have in the accounting environment we live in have stretched out the process material. And I think the fact that we're in a tech speed doesn't mean anything anymore. Companies are thorough, they're diligent, they want to make sure that they have answered every question. And I don't consider it zero risk. M&A deal by its very definition is allocating the risk. And I would argue that it's more a matter of trying to find balance between the risk of the buyer who has to live with this business and the seller, in many cases, is getting 85 or 90% of their proceeds at closing.
The frustrating piece is where you have guys who try to take best practices and apply them without having any idea what they mean. And so you've got, a 200 question diligence request coming out of a private equity shop for a company that has 3 guys in a garage, don't have their own servers, they're on Amazon Cloud. And that becomes very frustrating, regardless of the valuation. And then on the regulatory side, I've lived through this in my in-house job and now lived through it on the outside. And in the last 5 years, the politicization of the regulatory process around the world has gotten brutal. And it's not just overseas, we do it too.
Nice base that you can sell pieces into going forward. So it's that slowly growing MRR, ARR, however you want to term it, that private equity is addicted to in the technology space. They love fast-growing businesses, obviously. They love hot sectors, healthcare IT, obviously. But I think the growth, the retention, the profitability, it's not rocket science. It's everything you would want to invest in if you were investing as an individual investor.